Roku stock price is down roughly 14.8% after the company reported earnings. Let's take a closer look at what happened in today's episode.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
If you take a closer look at Roku's Investors Relations website, they did share their shareholder letter already, and there is some great information. I do want to say there's some bullish points and some bearish points to be made. First, we can start off with just active accounts, some of their key operating metrics. This was up 16% year over year to 65.4 million active accounts, and it was also up quarter over quarter. Obviously, good news for Roku. The second thing, streaming hours was 21.9 billion, up quarter over quarter and up 21% year over year. Again, another bullish case. Average revenue per user was up 10% year over year and was also up very low single digits quarter over quarter, if that. Again, I do want to say that is another bullish case for Roku, as right now we're definitely seeing kind of a macroeconomic hit, especially in the advertisement side. So for them to be up quarter over quarter and year over year, that's definitely some, I want to say, bullish thesis or some bullish cases for the overall stock. One of the biggest bearish case that we're going to see later on is the overall outlook that the company gave, but let's take a closer look at some more of this information from their press release. Let's start off with platform revenue that did grow 15% year over year. And again, I just want to emphasize how this is pretty strong, especially since a lot of advertising companies are not seeing this type of growth. Some are even seeing a bit of a decline year over year. Unfortunately, the player revenue side, which is their hardware side, is down 7% year over year. I would expect the consumer market, especially in the electronics, to take a bigger hit. So I do want to say this is kind of expected to see that decline in player revenue. Overall, total net revenue did grow 12% year over year. Unfortunately, platform gross profit declined 1% year over year. I do want to say if we have been taking a closer look at the advertisement market, advertisements on the average cost per ads is probably decreasing for Roku as it is for some of the other advertisers. So that is expected. Overall, total gross profit is still profitable, but it did decline 2% year over year. I do want to say now this is probably where a lot of the bearish cases are coming for Roku. And this company has kind of ballooned in total operating expenses. And this is something I actually took a closer look at some of the bearish thesis behind Roku. Make sure to watch this video above if you want to learn more about some of the Roku's bearish cases. Again, for investors, I think it's important to understand both the bullish and the bearish cases. But we can see research and development is up 73% year over year. Sales and marketing is up 91% year over year. Total operating expenses ballooned 71% year over year. And obviously that's not what you want to see. Revenue only growing in the low teens while you have operating expenses increasing 71% year over year. Definitely a big bearish case for Roku, and one of the biggest reasons I want to say this stock price is also down. Now we can see at the end, at the bottom line, income from operations was at a loss. This is the third quarter this company is announcing at a loss, and it did drop dramatically. If we take a closer look at quarter four, the company expects total net revenue of $800 million. If we take a closer look at quarter four of 2021, it was roughly 865. So the company is expecting a year over year decrease in this upcoming holiday season. They also are expecting a net income loss of $245 million. Again, this is not what you want to see, especially in times right now. If you're enjoying the episode, make sure to hit the thumbs up as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Even though expenses are ballooning, I do want to remind investors that this company has roughly $2 billion in cash and cash equivalents, roughly $90 million in current portion of long-term debt. So this is short-term debt. And at the moment, no long-term debt on their kind of balance sheet at all. So financially, in forms of balance sheet, this company looks pretty well. If we take a closer look at their cash flow from operations, it's barely breaking even. It's about $4 million at the moment compared to same time last year, which was $253 million. On the bright side that they are cash flow positive, there's also a negative side, the stock-based compensation. Due to overall we saw the huge expense growth in research and development, in sales and marketing, stock-based compensation has increased. obviously because of the huge growth in headcount. Another huge shift in Roku is the overall talent. For example, they did announce a new president of Roku Media, which is going to focus on the ad monetization, content licensing, and production. They also recently announced a president of devices, which is focused on increasing active accounts through the sale of first and third-party TV streaming devices. They've also announced a president of consumer experiences, which is focused on building exceptional TV streaming experiences that grows engagement and long-term customer values. And unfortunately, the CFO is planning on leaving Roku sometime in 2023 after helping recruiting and transitioning his role to a successor. So as an investor, you definitely don't want to see that huge shift in talent or kind of the executive team, and this is something that we're seeing at the moment. If we take a closer look at their account acquisition, and if we remember, active accounts was up year over year 16% and was also up quarter over quarter. They do mention that the growth was primarily driven by TV sales in both United States and international market, along with the improved active account retention. Unfortunately, due to numerous macroeconomic events, Roku is absorbing the higher price in their products instead of giving the price increase to consumers. I believe that's a great move for the long term of things, but could definitely create a lot of short-term headwinds, at least for the overall financial data. In quarter 3, the Roku operating system was the #1 selling smart TV in the United States, which I think was pretty impressive. They are also expanding their global Roku TV program to Germany and to Australia. They also mentioned that their business model works well outside of the United States. The first part of that model is to scale. The second is to get engagement, and third is to monetize. A prime example was Mexico, where they now are the #2 selling smart TV operating system in Mexico. And because they kind of grew in scale, now they're able to start the engagement and the monetization. They recently launched their advertisement business there earlier this year. They hit a little bit about the Roku smart home, and originally, and I still am a little bit more bearish in this kind of scenario because I don't understand why Roku is really trying to grab this smart home device market. They're doing it more in a subscription as a service solution for hardware. I personally believe it's a bad idea, but I can definitely see some of the bullish reasons or some of the reasons the market is going there. First, they mentioned similar to their TV streaming model, they plan to build scale with their devices and then monetize through smart home services, which they expect to become a very large market. This is where I started to get the potential of this market. First here, if you have a Roku TV running on Roku OS and you have some Roku hardware, let's say a doorbell or someone is coming in, you can see it in your TV who's coming, what's happening, or anything along the smart home products. So I do believe it's great that Roku has a strong operating system. Now they're trying to unite it with different hardware. I can definitely see a use cases for this in the TV side, but here where they kind of have their Roku smart home app, I don't really see a use case so much here. Eventually, I wonder if they're going to try to link these together and find a way to monetize their users even more. Maybe adding some form of advertisements here for streaming services or whatnot. But I do believe there is a potential for synergy here. At the moment, I don't see it. I definitely understand why they're going this route. Not understanding why they go this route at the moment, but hopefully management can share us a little more information later on. Roku does mention that the Roku home screen still has significant monetization opportunities. Again, this is very heavily in the advertisement side. A prime example was House of Dragons. They do mention that Roku users who watched the Roku Rundown were 3.5 times more likely to sign up for HBO Max and 17% more likely to watch House of Dragon versus users who did not watch the Roku Rundown. So again, this kind of shows the overall strength of their platform and why kind of big streaming services are going to continue to advertise here. Another thing that I thought was kind of bearish, and unfortunately maybe I still do because of the heavy expense in streaming content, is the Roku channel. But they do mention for the third consecutive quarter, the Roku channel was the top 5 channel by both active accounts reach and streaming hour engagement on the Roku platform in the United States. But again, I see the synergies behind this, because what's the overall point of Roku? Roku is a big advertisement platform where if you are a streaming giant, you want to go in there because users are more likely to subscribe to your service because you already have a huge streaming customer base. Here with the Roku channel, for example, they do have some synergies of kind of potential growth in user acquisitions. They had one with content partners like Paramount Plus, so you can kind of be watching the Roku channel and then you gotta get hit with some form of advertisement way to kind of subscribe to Paramount Plus. So the integration of the Roku channel, in my opinions, can definitely bring a huge potential for this customer's revenue. At the end of the day, I do want to say content is expensive, and that is a huge bearish case here for the Roku channel. In forms of monetization, they mentioned they continue to see an increase in share of advertising spend as traditional TV audience decline. So the US traditional TV ad spendings are decreasing and most likely moving to streaming and kind of connected TVs at the moment. But unfortunately, due to overall macroeconomics, we're still seeing numerous headwinds even in the kind of connected TV hardware. But Roku mentions that viewers continue to move to TV streaming more quickly than ad dollars, a very bullish case for Roku. Like I mentioned, for the outlook, they do anticipate the Q4 revenue to be down year over year due to overall macro environment to further pressure consumer spending and the decrease in advertising budgets. They also mentioned that their year-over-year growth in their operating expense was due to a nice amount of hiring in late 2021 and early 2022. They do mention that they have started taking steps to significantly slow down the rate of hiring and other operating expense growth in the late Q2 of 2022, but it will take a few more quarters for this year-over-year growth rate to kind of normalize. So at the end of the day, Roku is down 18%. I definitely understand the bearish case, but I do want to say there is huge potential for this company, as we saw the overall growth in connected TV still, their huge strength in the operating system, and even though I'm still kind of bearish in their smart home products and in their Roku channel, I do believe that also has the potential, if they create strong synergies, to be a huge growth opportunity for the long term of things. So take care, have a good day, and see you next time.